Hello traders, and welcome to a new video on support resistance level trading. Oh, had a yawn there. That's why I had that delay. Now what we're looking at today is a different way to trade support resistance levels that are not typically taught in most articles, books, guides. Speaking of guides and speaking of unconventional methods, I wrote a book on unconventional price action and volume trading, and if you're interested in picking that one up, you can click the link in the description below for that. Now what I want to cover today is a ladder limit order strategy that we can use when Bitcoin is, or any coin is ranging, and we can take advantage of stop loss hunts and resistance and support bounces. Now typically what's told is whenever price is in a strong trend, you want to use a pullback strategy. So when the price goes up, we don't do anything, but then when the price goes back down, we use limit buy orders so that anyone who's market selling, and that's why price goes down because there's market selling, they market sell into our buy order, and price keeps going up, and let's say we want to buy more. Well, if we see price beginning to go down, we place a limit buy order or a bid, we get filled, and then price just continues to go higher. This is just a classic kind of pullback strategy that many have talked about before, but we're going to focus on a ranging strategy. Now this strategy involves 4 limit orders, 2 limit buy and 2 limit sell, with 2 stop losses as well. So it's a fully protected strategy, meaning that it's not possible for you to lose all your capital if you use stop losses, and it's not possible for you to have a runaway position where you go into a loss and you don't want to take that loss. That's not what this strategy is based on. This strategy is more based on quicker scalps, or you could also use this for more medium term, but the focus today is going to be a little bit more on the short term. Before I show how to do this, I do need to say the theory behind why this works, because you may just be interested in me showing exactly how to profit off this, which I can and I will show. But what's important is that you understand the theory behind why it works. Because if you don't understand the theory behind why something works, you should not be trading that. That's suicide. So why do support and resistance levels become support and resistance? That's a question I answer in my guide, but if you want to pause the video and try to answer that now, without looking it up, you can try to postulate that. Oh, big word for me, postulate. All right, so let me give the answer for that. Let's start with resistance. Why do resistance levels bounce? Why does price sometimes go to resistance, like here, and then price bounces back down? There's a lot of reasons, but the main reason that I think of is this. We have a lot of longs, or we have a lot of buyers who are buying within this price zone. Now what ends up happening is after price actually goes back down, this can establish this as a resistance area, as a resistance zone. The reason it's a resistance zone is because there were longs who had bought. Now these buyers are now holding unprofitable positions, meaning that they're trading currently at a loss. Meaning that whenever price goes back up and puts them back at break even, they may be more inclined to sell. And if they're more inclined to sell, that would mean that there is heavy supply within this zone. So that is one reason why price bounces off resistance. Now let's go to support. Let me identify just why does support become support, We can just even use these super short-term levels, very, very short-term. We had a market low here and the price bounce back, right? Well, what ends up happening? Well, for a time period of, how many minutes was this? 37 minutes. It's about 36, 37 minutes. What ends up happening, guys, is when a lot of shorts enter at a market bottom, such as right around here, those shorts are currently holding unprofitable positions at an unrealized loss after price goes up. Now what ends up happening is if price goes back down to where they initially established their position, many of them may be inclined to exit their trade at break even. Now when shorts exit, that involves buying. And if a lot of shorts are exiting their positions at a current price, that can create support. So many shorts exit at support because of many of them had entered around here. Many of them want to buy back or exit break even or at slight profit, and then price goes back up. So that's just the simple one-step reason why resistance and support levels work. So the first thing that I want to show with this strategy is how to actually set the limit orders. You want to identify support and resistance level within a range. I could use this guy, I could use this guy, and this guy. But I'm going to use the top of the range, I'm going to use the bottom of the range. So you can see by my horizontal order placement. Now the second thing that I want to do, because this is a ladder strategy, meaning we're using multiple limit orders, is I'm also going to place a limit order just below support and just above resistance, like this. How much far beyond is completely up to you. I cannot tell you an answer to, hey, put it this far beyond, put it like here, put it like here. You know, there's a comfortable distance that the more trades you take in this manner, you're going to begin to get a feel for how it actually kind of works and what works and, you know, what might not work. So something like this would be, you know, my setup here. So this is, as you can see, 4 limit orders covered in black. And now what we want to do is place our stop loss orders. Now, I'm gonna put my imaginary stop loss order. I'm gonna put it just right there. I'm gonna put one right here, as you can see. And just to make sure that you guys know that this is not a limit order, and then this is for sure a stop loss order, I'm gonna make these guys red. All right, now we have red stop losses. Great. So we got our stop loss set. You know, we have our 2 limit orders as well. Now what you want to do with this strategy is take your position size and divide it by 2 and place it in each of the limit orders. What that means is if I'm trading with a position size of $100,000, I'm going to place a $50,000 buy order here and a $50,000 buy order here. And I'm also going to place a $50,000 sell order here, limit sell order here, and a $50,000 limit sell order here if I was trading with $100,000 for my long and $100,000 for my short, with a full exposure of $200,000 in play. Of course, this would probably be leveraged. You know, this would not be spot. Well, you can't really short spot anyway. But that is for another story. So let's first of all see how this would have played out. There you go. We have our first fill here. So this would have been a very good fill, and it fills out resistance. Now here's one really important part of the strategy that you do have to understand. The more touches that a resistance level has, the more likely it is to break. The more touches that a support level has, the more likely it is to break. You can see this have, you know, 1 touch, 2 touch, you know, then we have 3 touches, and then it broke. The reason that occurs is you eventually get to a point where enough traders have been satisfied, and then price can discover new levels. So when you see, you know, 1 touch, 2 touch, and now we're filled, this can begin to be, you know, potentially a warning sign if we get a 4th or 5th touch. But right now we're holding a short position of $50,000, as you can see here. Now what you do with this position after you fill is completely up to you. There's no exit strategy that I really want to go over today because you have 2 options. The first option that you have is if one of your limit orders fills but the other doesn't, and you're holding this, you could just take a profit here and just close the position, you know, and then basically it would look like this. Hey, you have a profit, and you would just still have your limit order above there. Great. Or you could hold on to this position for a little bit more profit. It's your choice. If you want to be very aggressive, you could even hold this position until it, you know, hits here, because then that would include a you know, a very large profit if your limit sell order filled your limit buy order. So let's see how this would have played out. Wow. Okay. I promise you I did not look that one up before. I just literally placed on a random limit order, but that was a near perfect fill right there, as you can see. Price went down to a low of 11,647.5. Our fill was at 11,652, just about the direct market bottom. So had we shorted $50,000 here and gotten filled here, that is 1.82% profit, which by my math that's over $1,000. Right? No, it's not $1,000 because 2% would be $1,000. I think that's like, I'm trying to do mental math in my head right now. What is that? $800 something profit? $50,000, 1.82%. I know someone in the chat's going to be like, oh, it's obviously 852.3. How can you not do that mental math in your head and you call yourself a trader? Well, I think it's 800 something or 900 something, 1.82%. Okay, you guys get it. This order would have filled, and this order would have filled, and we get a 1.82% profit on our capital on one of our limit orders because not both filled. So that would have felt pretty good. We're just using this kind of range-bound strategy, and awesome. Now we have a second order filled, and we just got another touch, and we got a stop-loss hunt when price goes just beyond a high. and also when price goes just below a low. Now let's zoom out for a bit because I need to talk about the theory behind why these kinds of moves happen and why price tends to stop when it goes right beyond a high or right below a low. Two reasons. One, we have a lot of traders who had bought here. We have traders who bought here. We have traders who bought here. They are holding unprofitable positions for the large majority of this time. Now, what ends up happening is when price goes beyond that, a lot of them are like, wait, I'm in profit now. Awesome. This guy's in profit. This guy's in profit. This long's in profit. All these longs are in profit. With so many longs in profit, a lot of them may be inclined to sell because they're finally in profit after holding unprofitable positions for a long time. Put yourself in their shoes. If you were holding an unprofitable position because you bought at a terrible price like there, and it was in your scalper and you've been holding one for the entire day, like 9 hours, I think you'd be pretty inclined to sell. So that's why that occurs. Second reason why you see price just stop right beyond resistance is a stop loss hunt. What ends up happening is there's a lot of short stop losses and also short liquidation pools that are just beyond a high. I say that there are short liquidation pools because because price hasn't been to this area yet or for a while, this is untapped liquidity for liquidations. Price hasn't discovered this area in quite some time, meaning that there's large liquidation potential. The other part of that is stop losses. When price is ranging for long enough, you get a buildup of stop losses just above the high and just below the low, which is going to provide liquidity for that direction. So when we get that combination of a lot of longs who want to sell here and a lot of stop losses being hit and liquidations, you get a lot of forced buying from the stop losses, and you get a lot of eager sellers from the very willing sellers from the unprofitable longs who are not profitable. So the buying basically shrivels up at this price because no one else is interested in buying besides those who have their stop losses hit, and you get a lot of interested sellers. What ends up happening? Well, price goes down in the short term or even more in the medium term. That's why you get stop loss hunts to occur, and that's why price goes just beyond a high sometimes. So this would have worked out very well again. You could take profit now, or you could just hold this. We'll see what would have ended up happening if the stop loss was ever hit, or if it wasn't. Hopefully, it hits here, because that would mean that we would have gotten like full profit. Jeez. And one note I do have to say, guys, because our limit order filled here, even if price went here then here, this stop loss wouldn't trigger. Because essentially we're short $50,000 here from our last limit sell order, right? This is a buy order for $50,000, so our position would go flat. We would have a position of 0. We wouldn't have any position at all, because if this ended up happening, then we get a 2.72% profit and our position's closed, meaning the stop loss never triggers. So if price just shot down, that would be lovely, of course. But you could have already, scalped this and taken your profit. But I'm just going to play out the range to see what would have ended up happening because I'm kind of interested and I have no idea what happened here. I wonder if we hit 588 or 12,000.5 first. I am on the edge of my seat in, because if you had shorted $50,000 here and this is a 2.8% profit, that's a lot of money. Okay. That is really unfortunate. You can see we were just not filled, I think. Wait, were we filled with our one? Well, 588's our order. It went down to 592. So, sometimes you get lucky with those really good fills, and sometimes you get something like that might not be as lucky. But essentially, this would have worked out pretty well because the range continued. I mean, still, neither has been hit. But I think you probably would have taken profit somewhere around here, as you can see. If you hadn't taken profit anywhere here, that'd be kind of foolish because, as you can see, price gets a lot higher. Yeah, so that would have worked really well, as you can see. Basically, what would have ended up happening is you would have had 2 profitable trades. But what I like about this strategy is sometimes you can get 1 profitable trade and 1 unprofitable trade and actually find that the profitable trade is larger. As long as you don't, take profit right away, of course. You do need a large amount of discretion to decide when is price ranging and when is price trending. Because right now, I have to determine, is price going to trend upward or downward, or is price going to range? Because this is a ranging strategy. Now, if I don't think price is going to stay in this range, then there is no reason for me to use thank God. As you can see, proves my point. If I didn't believe that price was going to stay in a range, then I do not want to use this support resistance strategy where I'm putting an order here, putting an order here, putting one just above a high, putting one just below low, because that would have worked out, not so well. The only way, actually, I kind of take that back. Let me show you guys. Because what would have ended up happening is if we identify this resistance, this support, we don't know any other information, and this is what we had. Look, we're going to do this. Oops, that guy should be black. We're going to use our order at resistance. I'm going to put that guy right there. We're going to use an order right beyond resistance. Perfect. An order at support, an order just below support. And let's say a stop loss right here and a stop loss like, here. As you can see. Now, this should be red, but just pretend like it's red. It's black. But what would have ended up happening is first you get filled here, right? And then what ends up happening is this, guys. You have a profit of 0.93%. That's in the book. And then price keeps going down. And then your limit buy order fills. And price goes down to hit your stop loss. That's only 0.61% away. So you would have actually made a profit here, guys. Because you make that 0.93% profit off your capital. And then when that second limit buy order fills, because remember, when price hits here and then price hits here, your position is flat. You are out of your short position because this size is equal to this size. Then when this guy fills, you get a loss of about 0.65. So you would have profited here, yeah, because you lose 0.65%, but you make about 0.93. So I take what I had said back. You actually would have probably made money in this range anyway by just using this kind of range-bound strategy of using one order beyond resistance support and one order at resistance and support, fully taking advantage of those who are in unprofitable underwater positions. And I can just keep doing this, and this is a way that a lot of profitable traders trade, just taking advantage of the, of how the market works. All right, let me delete this guy. Now, first you want to do is identify the range. Now, if I don't think that the range has developed yet, then I'm not going to start, throwing around my orders yet. I'm going to wait a little bit. Let's see here. All right, I kind of think that the range is developing here. I'll start to place my orders. Yeah, all right, I'll place one. I'm going to place my limit, again, 2 orders for each. I'm going to do a limit buy order here. I'm going to do my stop loss, kind of like hunt order right down there. That's not my stop loss. These are my 2 limit buy orders. I'm going to also place a limit sell order here and, limit sell order right beyond. My stop loss is going to be there. My stop loss is going to be here. Look, guys, I don't know what ended up happening here. Maybe this is too early for a range-bound strategy. Maybe the trend isn't done yet. But hey, we'll see. I'm gonna push the play button, and who knows? Who knows what happens? All right, we didn't get filled there. Now we got filled. We for sure got filled. Oh, that was a beauty. We got filled perfectly at resistance right there, and price went down. So you're currently in a profit of, what is that guy? You're in an unrealized profit of about 0.7%. At this point in time, I don't know what's going to happen. You have the option of either holding this and hoping the price keeps going down, or just taking profit and just moving on. We'll see. Whichever one you picked, whichever one you thought would be better, stick with that, and we'll see which one of you guys was right. Was it better to have taken the profit right away, or was it better to just hold? It looks like... Yep, that is a perfect fill once again. Look at that beauty. We got filled right there at like the direct market bottom. So it would have been better to hold because we get filled at that top right there, and we get filled at that bottom right there for about a 1.8% profit. And again, if I'm trading with $50,000 with 1.8%, okay, well, first of all, let's talk about what just happened here. So what ended up happening is we got filled here, and we got filled here, and then we got filled here. Awesome. So that was a 1.8% profit in the books. Then we got a new limit buy order filled that was right below support. Now that gave us a loss because it hit our stop loss of 1.05%. So we profited 1.8%. We lost 1.05%. On average, we made about 0.75% on our position. Trading with $50,000 for each of these, a 0.75% is 350. No, 375. Yeah, pretty sure it's 375. So whatever, you make about $375 off of a 50K order. Yes, that would have worked well. And that's exactly what I said 10 minutes ago. That what can happen with this strategy is you might have an unprofitable trade and a profitable trade, but your profitable trade almost always is going to be larger than your unprofitable trade because you're using careful stop losses. And that's really the benefit of the strategy, that a lot of things can happen. You can even get things like this, but you still end up making more of a profit just because of, the way the strategy works. So that's going to do it for this video. If you're interested in learning more, you can pick up my price action volume guide where I teach exactly how to trade in manners like this. This is a method that I've been using, trading for a long time, and it's done quite well for me. So I want to share it with you guys. You guys can test it out with low capital. Do not try to trade this with, heavy amounts. Just maybe try to ease into it a bit. That is not financial advice, of course. That is just a suggestion because I'm not a financial advisor. I'm just a trader. So I think that's going to end the video. It's been a long one, 21 minutes, but it's been a fun one. So if you guys have any questions, you can DM me on Discord or post the comments, and see you guys soon.